How does home appreciation influence current housing market conditions? Imagine watching your home's value grow over time and wondering how that change impacts the entire housing scene. Well, home appreciation plays a big role in shaping what buyers and sellers experience today. When home values go up, sellers often see higher prices for their properties, which can mean more profit if they decide to sell. But for buyers, rising home prices can make it harder to afford a home, especially if wages aren't keeping pace. The speed at which home values increase varies a lot depending on where you are, the state of the economy, and how many homes are available. In recent times, the pace of home appreciation has slowed down quite a bit. Instead of double-digit increases like in 2021 and 2022, prices are now rising more slowly. Some areas are even seeing prices fall. This change is mainly because mortgage rates have increased, making borrowing more expensive. Also, some markets have more homes for sale, giving buyers more options. As a result, homes might stay on the market longer, and sellers might need to lower their asking prices to attract buyers. When prices drop in certain regions, sellers could face selling for less than they hoped. For buyers, this slowdown can be a good thing. Prices aren't climbing as fast, and in some places, they are dropping. But high mortgage rates still make monthly payments higher, which can limit what buyers can afford. More homes are available, giving buyers more choices, but the cost of borrowing can offset the benefit of lower prices. Different parts of the country experience these changes differently. In the Northeast and parts of the Midwest, home prices are still growing slowly because there aren't enough homes for sale. But in places that saw rapid growth during the pandemic, prices are now falling. Buyers and sellers need to pay close attention to local trends because national averages might not tell the full story. Another factor to consider is the lock-in effect. Many homeowners have low mortgage rates from years ago. Moving means losing those low rates, so fewer people are putting their homes up for sale. This keeps inventory tight, even if new homes are being built. For buyers, this means competition for existing homes can stay fierce, despite overall slower price growth. For sellers, understanding how much home values are appreciating helps set realistic prices and timelines. Overpricing in a slow market can lead to longer selling times and price cuts. Sellers in declining markets might need to decide whether to sell now or wait for prices to rebound. Buyers benefit from slower appreciation because they have more time to make decisions and might not need to bid over asking price. But high mortgage rates still make monthly payments tough for many. It's wise for buyers to keep an eye on future rate changes because if rates fall, prices could go up again. Looking ahead, most experts expect home prices to grow only modestly or even decline slightly in some markets. Mortgage rates will continue to influence how many people want to buy and sell. If rates change significantly, it could quickly shift the balance between buyers and sellers. In the end, home appreciation or the lack of it has a big impact on current housing conditions. For sellers, it guides how they price and time their sales. For buyers, it affects what they can afford and the options they have. Staying aware of local trends and economic factors is key to making smart choices in today's market.